We have Mr. Sanjiv Bhasin joining us on the show to talk to us about his top recommendations right now. Mr. Bhasin, good to be speaking with you. First up, let's start with market itself. And 75,000 was that big mark that we managed to scale on Sensex. And the next question that we're asking everyone is, what about that 1 lakh mark on the Sensex? When do you think is that likely to happen?
Good afternoon. Wish I knew, Anisha, at this rate, who knows how fast it comes. But take it with a pinch of salt. We are fully priced now. A large part of the global macros, the demographic premium, the input of SIPs, all played out. So first there should be some healthy correction in the market before the election, and only then we will scale higher. We need earnings to catch up, and I think that I would say 85,000 is coming by the end of the year, but maybe a year and a half before we get to 1 lakh number. So I know now these are very, very attractive numbers and now everyone is gung-ho. But this is the time to be a little cautious and take some money off the table. Simply put, because one, inflation is rising, oil is up, and we know that the rate cut in the US is now being prolonged. Along with that, I would say earnings seasons is fully priced as far as the positives. Any negative surprise could be, dealt a little harshly. So taking some money off the table right now is a good move. We are in a festive mood and 75,000 could be a very, very sweet benchmark, which may remain for some time.
Right, Sanjiv, absolutely. 75,000 is a sweet benchmark. 85,000 saying maybe by the end of the year, at least hoping for that. But, you think you're going to be removing from some of the time to book some bit of a profit. Will you wait for earnings season to end, or is there some different play that you're looking at right now if someone is looking to enter, or would you just avoid and sit with cash?
So, Vinny, it's a glass half full, half empty. Most people on the sideline have realized that the money now from fixed deposits is actually going into mutual funds. And that is a phenomena which may continue for some time. Right now, it's the feeling of missed out, which means that any and everyone wants a part of the pie of equity or a SIP. And that's why you're seeing record inflows into mutual funds. Waiting for results or not is not the time. It is always good to leave something on the table before taking your money off. So say auto, say select metals, which we've been very bullish. You can take some chips off there. Bank specialty chemical is something which we have been recommending as a contrarian play. They have done well. So you can, shift or rotate your money. I'm not saying totally exit, but keeping some cash in case there is a correction, which is much on the cards, would be a good strategy.
Keep some powder dry because you might get opportunities to deploy. But let's get stock specific, Mr. Bhasin. You talked about the metals, right? Vedanta firing away today was one of those candidates that underperformed. You have other names like NMDC, etc. on fire as well. What within metals is something that you would take the money off, and where would you invest if you had to within metals?
Yeah, so Vedanta has been one of our clear picks. It's been a 33% up performer. Nalco we recommended very strongly at 1820. 118.20 is up to highs. So is SAIL. Select pockets you could take off Tisco. Tata Steel and Hindalco you could take some money off. Hindalco, remember that the upfront capex which they've announced for their Novelis play could be a little bit drag on earnings. So Hindalco and Tata Steel are two which we would recommend to take money off. We would put that money back into Vedanta. We think Vedanta, simply put, is the best play you have on the total non-ferrous play. So even people don't realize it's the only nickel producer in the country. Along with that, Hindustan is the best proxy for silver and silver prices. And you have a whole basket of other, they've got 2,400 megawatts of power. They've got coal. They've got everything possible as iron ore. I think Vedanta still is a very, very undervalued stock. On the other hand, specialty chemical plays are looking extremely good. SRF, UPL, which is one of my top picks. I think that these two could be very good plays. We also like India Bull Real Estate, where you've seen a new capital infusion of 4,000 crore commitment by the promoters and very, very marquee names. Once we get through the merger talk, which is expected on the 24th of April, this stock could see a strong re-rating. At a time when DLF is at 2.3 lakh market, 2.3 lakh crore market cap, this is just a paltry 7,000 crore, despite having land revenues which are equal in scale to large builders, particularly in Maharashtra and NCR.
Sanjiv, I want to talk about a stock, and this specifically is Zomato. When you look at it, obviously it's nearing again. Today it managed to touch the 200 mark around that level as well. What's the word on Zomato? That's run up that is there for Zomato. We've not seen it stopping. Now, obviously, Invesco has upgraded the valuation for Swiggy. How interesting is this play?
Yeah, so that's the uncanny part about bull markets. Everyone hated it at 40, 50 rupees, and at 200 you love it. So chase the momentum is a perfect cadre for whatever way you want to upgrade it. And Swiggy itself is seeing a raise in rail. I think at 200 there is not much scope on the upside. Even the Blinkit part is getting fully priced. Now, Vinny, we as a disclosure had Zomato, PB, Fintech, and Paytm, all three picks. Paytm definitely disappointed. We lost money, but we made it up. PV Fintech has more than doubled, and Zomato is up 4 times. So not complaining, but all I'm saying is that in the frenzy, don't get caught up in the momentum. Buy some now, but wait for corrections. Entering foolhardily at this price just because of an upgrade of us and another peer group is again, a little bit of a problematic. I would say that the brick and mortar companies, particularly cement, steel, these are still giving more opportunity and where earnings visibility is much more clear. As a disclosure, we thought that the Blinkit buy everyone was downgrading was a very good opportunity, and now we are fully pricing in most of the positive. So we are not advocating to go long, but put some money, but be prepared that you can see a sharper than expected correction in the next fortnight.
Sharper than expected correction maybe on some of the names in the next fortnight. But Mr. Bhasin, before we let you go, you talked about how you're positive on cement. So give me some topics within that sector. And you talked about Nykaa and Zomato in detail, but what about PB Fintech? Because they have been doing these fresh partnerships with the likes of IIFL, Lombard, etc. Is that also fully priced in now at current valuations?
So that's a difficult question, Anisha. 750 was where we put our money and it has doubled. I cannot advocate to buy more. It is a very, very sweet play, I think, on the insurance space, the tie-ups they are doing. Their Paisa Bazaar is doing extremely well. I don't rule out more upside, but like I said, right now in momentum, everything is being chased. See where your valuation comfort is there, only you should delve into that. On the other hand, the other question you asked me was on cement plays. I think Ultratech is the most undervalued stock, even though it scaled 10,500. At 95, 97, you should put your money there. Simply put 154 million tons capacity and prices now going to rise. I would also advocate buy on Dalmia Bharat and both the AC combined. So if you had 4 of these, you are almost getting 53% of the market share of cement. And cement prices generally now start to do well just before the monsoon because there is a lot of construction activity as far as roads, ports, commercial and residential. So Ultratech is our top pick along with Dalmia Bharat and ACC and Puja. You could add some more here.
Bhasin, thank you so much for that. Surely keeping an eye out on Ultratech, KCC Ambuja together, as well as Dalmia Bharat in the 7 pack. That was Mr. Bhasin in with us to talk about the markets, interesting views coming in on individual stocks as well. But
if you like this video, then like, share and subscribe to ET Now.